In this month's economic outlook, we are going to discuss what traffic looks like through the Strait of Hormuz and who has effectively found a way through, regardless of the geopolitical tensions. Now, to do this, it's best understood when talking about the Strait of Hormuz and the subsequent closure that it's really a series of events rather than one key conflict. The corridor through which a fifth of global oil transits hasn't really gone through one crisis. It's really been a 5-phase whipsaw. We've had a full-scale conflict, a prolonged dual blockade, fragile diplomatic recovery, renewed collapse. And throughout all of this, what we can do is we can actually use satellite AIS vessel tracking data to track daily transit activity through the strait itself. Now, it's really clear that tanker movement has collapsed. This is something that has been discussed quite extensively. And then, of course, we have heard quite a lot about it with the volatility in the oil markets, as well as broader commodity markets as well. But when we tease out the data, we start to see that there's even more information that we can glean from the closure than just tanker data has collapsed. When we break it down by transit by vessel types, for example, we see a very clear split. We have dry bulk and general cargo vessels that have proved much more resilient than tankers. Also container ships and ro-ro carriers. They've really climbed off the floor sooner. We've also reached higher levels with each partial reopening. Now, that gap was actually sharpest during the June peace deal, with both categories surging well ahead of the rest. And general cargo in particular has stayed the most elevated of the 5 ever since. Part of this is due to diplomatic relations. So dry bulk and general cargo, they showed more movement post-conflict than the others, because they carried cargo that Iran had explicitly exempted in late March, since roughly a third of global fertilizer supply moves through Hormuz. And so a UN task force was actually formed specifically around getting fertilizer, as well as grain moving ahead of the planting season. So what that did was it gave dry bulk, it also gave general cargo a legal pathway to get through the Strait of Hormuz that the other vessel types did not have. But when we take it even one step further and break down the data by port surfaces, something genuinely interesting also surfaced, and it's that ports that don't require passage through the strait at all saw meaningful sustained drops in traffic. This is really interesting, right? Compare that to Jeddah on South Arabia's Red Sea coast, which saw increased traffic. 2 ports with no physical need to cross Hormuz, 2 very different outcomes. Now, what this tells us, because we did see a fall, right, in ports that don't have to pass through the Strait of Hormuz but are quite close to it, tells us that the shock propagated through regional conflict risk pricing and insurance markets, not just physical choke point closure. And so what does that tell us? That tells us that the reopening of the Strait of Hormuz is not going to be an immediate return to normal. It's going to take quite a bit of time for insurance and risk premiums to sort of reassert themselves and for the logistical network to return to more of a past trajectory, if it ever does. When we take one last insight that I'm going to mention is that when comparing 2 ports in the same emirate, so we see that Dubai's traffic, nearly 70% general cargo, Jebel Ali is 56% container. Despite sharing a government, a currency, and identical geopolitical exposure, we see that Dubai recovered to 80 to 100% of baseline by mid-2026, while Jebel Ali stagnated in the 10 to 20% range for most of the same period. The clearest difference between them is what they carry and how flexibly it can move. So general cargo mostly travels on smaller voyage travels chartered ships that can divert port to port, while container traffic runs on larger vessels normally locked into more fixed global routes. Now, that distinction, not port identity, not nationality, looks like a key driver of who came back online and when. Now, all of this to say that the Strait of Hormuz crisis is best understood not as a single closure event, but as a test in supply chain resiliency and responsiveness. And what it really brought to the surface was what type of goods and how they're moved can respond in sort of what time frame. And so as we look to the future, right, it's very unlikely that geopolitical volatility it's very unlikely that volatility is episodic, right? As we talk about 2026 and beyond, So the conversation really has to transition to what can we do to mitigate our risk in this environment. I hope that you found some of this data insightful and useful, and I look forward to talking to you again soon.